Okay, good morning, folks. Good evening, good afternoon, of course, depending on where you are in the world. For those that don't know me, my name is Andrew Lockwood. Can I just check to make sure that I am coming through okay? Maybe someone can drop a little yes, we can hear you, something like that, so that I know that you can hear me. Let's have a look here. Who do we have? Let's have a look here. I'm just making sure that's coming through. Hopefully we're coming through. Here we go. Okay, so yeah, for those that don't know me, my name is Andrew Lockwood. I have been a trader for about 35 years. I'm going to be your guest over the month of May, your guest analyst here on the 8Cap channel. So hopefully you want to get involved, interact with us. Let me know if there's anything that you want me to look at, any questions that you may have. I'll only be too happy to help you as well. I'm just checking to make sure that we are seeing the teething problems on the first time. Obviously, I've not used the platform before for the GoToWebinar, not something that we normally use. Just making sure you can hear me because no one said anything yet. That's why I'm stalling here at the moment. I assume that you can. Okay, right. Well, let's assume you can. Tech will sort out for the issues. Okay, so I did a stream on Monday on YouTube, so some of you will be a little bit familiar with me and my style of trading. Basically, I have two real sort of ways that I attack the market. One is intraday. Intraday trading is generally trend following. So basically, I'm looking to enter trends on predominantly the Forex market. Okay, so I do look at indices as well and some commodities, but predominantly we trade the Forex market here. That's the intraday, looking for trends. I'm going to show you how I look at trends throughout this little session we're going to have with you today. But also I have another trading strategy in my tool bag, and that's basically on the daily chart, and that's looking for the big reversals. And it basically stems from my trading background, really. I used to work in the trading pits. Okay, so you can see my colored jackets here behind me, and I basically would be standing in the trading pits, shouting and screaming at people. Everything was done with hand signals, eyes, and the voice, and so forth. What I noticed over the years, certainly when I came on screens in 2005, I realized I was lacking something. I sort of like to sort of move back to when I was in the trading pits, what was working right for me then. It was basically the noise. It was basically the noise, the crescendo of a trend moving when everyone was buying and shorts are covering. Basically, there'd be a big sort of increase in the noise levels. Often when those noise levels dissipated, when they calmed down and going a bit quieter, the markets would go in the other direction. So basically, I formulated a strategy around that same concept. It's called the naked trading strategy, which is a day trading strategy, one that I use all the time as well. So there's basically two strategies in my tool bag, if you like. And we'll be discussing those over the month as well. Maybe, hopefully, you can learn from something there as well. Maybe you can take it away and implement it. Hopefully, by the end of the month, you're not only going to hear my insights into how I attack the markets, but also maybe walk away with a bit of a strategy that you can maybe go away and back test yourself and see if it works for you. Trading is all about having confidence, and that basically comes from back testing. Okay, so this is quite a busy week in the markets, forex markets, stock markets, and so forth. It's a busy week because we've got lots of central bank rate decisions. I'm not going to go into too much of the fundamentals, but basically interest rates are what dominate normally where a currency would go. So a country's interest rates is a clue on how strong an economy is, and therefore how strong or weak a currency is. And this week we've got a whole raft of central bank rate decisions. For those of you listening out in Australia, and I know there's quite a few of you out there, you will know, be undoubtedly aware, certainly if you've got credit cards or mortgages, that they have started to raise their interest rates in Australia. They had a 0.25 basis point rise a day or so ago, and consequently the Australian dollar has been pushing higher. We've also got the FOMC, which is out today. That's the Fed, that stands for Federal Open Market Committee. They will be announcing their rate decision later today in about 9 hours time from now. Markets are expecting them to raise interest rates by 0.5 basis points. It's pretty much in the market. The dollar has been reasonably strong, very strong, I should say. Dollar has in fact just off 20-year highs against the Japanese yen. It's off just off 5-year highs against the people's favorite, the euro, at the moment. So the dollar has been extremely strong, basically because of what's been happening to the interest rates. So they're going to make their announcement this afternoon or this evening, looking for 0.5%. There are talks that there may be a 0.75% basis point rise, and that does happen, then you can expect to see the US dollar push on quite significantly. My personal view, and for those that know me, and certainly as you get to know me over the next month or so, you'll know that I don't really trade my view. My view is irrelevant, quite frankly. Who am I to know, where the markets are going? I just trade what I see. If the markets are going up, I'm buying. If the markets are going down, I'm selling. So I think that the Fed are going to move by 0.5 basis points, and I think the US dollar is going to come under pressure today as we see some profit taking. But I'm not trading that as a strategy. I will do whatever the market tells me it's doing, pretty much like I was when I was a city trader in the trading pits. If Goldman Sachs was buying, I'm going to be buying. I'm not going to be standing in the way of Goldman Sachs. So that's basically the way I trade. I don't trade what I think is going to happen. I don't think Goldman Sachs are wrong. I don't care if he's wrong. I'm buying. So that's basically what I do. So I think today we're going to see that in the US, and I think we'll see the dollar come under pressure. We'll go through the charts in a moment to look at some potential opportunities. Later on in the week, we've got the UK Bank of England. They decide on the interest rates as well, and the markets are expecting them to move interest rates by 1/4 basis point. The British pound is actually reasonably strong into this. So we're obviously seeing the rate hikes move now. Well, we saw Australia, New Zealand move a few weeks ago, a month ago. They've moved twice now. Australia started to move, Canada's starting to move, pound started to move as well. And we're expecting to see another rate hike in the UK today. Tomorrow that will be. So that will be another reason why you might look to buy the rumor, sell the fact after the announcement, unless they're really hawkish, unless they're really surprising the market. Maybe there's a bit of profit taking. Often that is the case. Fundamentals, everyone thinks announcement, buy it, because it's good news. And often the case, it's already in the market, and the market reverses as everyone scrambles to take profits. I found that happen many times. In fact, it's a trading strategy that I used to trade very successfully many years ago, the non-farm payroll. Talking of which, good segue. Non-farm payroll is out on Friday. Basically, it's the job numbers in the US. That basically tells us how the state of the US economy is doing. More people are employed, more people are spending money, more people are spending money. Up goes prices, inflation, interest rates have to follow. I don't know if it's going to be such a big event this month, because obviously we've got the FOMC today. So on the charts now, on the screens here, you will see the momentum meter. I call this momentum meter. I had this coded for me many years ago when I first came on to onto the screens. As I say, I lost a lot of money 2005, 2006, thinking that I could replicate what was going on in the trading pits. To a costly experience, found that wasn't necessarily the case. I had this coded for me many years ago. It doesn't predict the future, but it does tell me exactly where the markets are at the moment. It tells me where the money is flowing. Okay, so we basically can see what currencies are getting strong against what currencies are getting weak. And as a trend follower, I like to buy the strong currencies and I like to sell the weak currencies. That basically is an edge. If you can buy strong and sell weak, you've got an edge. And the markets are basically trading the markets. It's all about having an edge. It's not being right 100% of the time. No one is going to be right 100% of the time, but we want to be right more than we're wrong. And to do that, we need to have an edge. So this gives me a potential to have that trading edge. For those of you that have just watched the trading battle, for example, I was on against Nick Leeson about an hour ago. Nick Leeson, the infamous rogue trader, and I took a trade during that session. It was basically buying the British pound because the British pound was moving up and selling the Canadian dollar. The Canadian dollar is this purple line, the British pound is this white line. These are converging. These are having a change in direction. Now, I don't know if it's going to pay dividends. At the moment, it's working out quite nicely. The pound is continuing to be strong, but I like to use this on a higher time frame chart and then look for my bias on the lower time frame chart. So quite often I'd move it out to the 4-hour chart. You can see here at the moment we've got the Australian dollar very, very strong at the moment. We have got the Canadian dollar and the Australian dollar both very strong at the moment. These are the strong currencies. If you're trading the shorter time frame charts, these are the currencies that have the best edge. That doesn't mean they're going to be strong forever, but at the moment they're the strongest currencies. You know, it's like that tanker ship on the ocean. You know, to change direction, it takes time, but at the moment, that is where it's going. That's the direction it's heading. So at the moment, these currencies are the ones that maybe you should be looking to buy. And these currencies down here are the ones that you should be looking to sell on the lower time frame charts. Okay, so at the moment, yeah, you've got the US dollar. The US dollar is this green line. I colored mine green because of the greenback. And you see the US dollar is coming under a little bit of pressure at the moment. And if you look here at the DXY basically is the index that we look at when we're trying to evaluate the US dollar. So this is the US dollar now. I've got multi-time frame analysis. Always like to use multi-time frame analysis here. On the right of the screen, I normally have this set to the daily, but I was doing a presentation earlier. We got it out of the monthly. While we're on the monthly, okay, US dollar index at the moment is trading around the 103. Okay, earlier, beg your pardon, this is the hourly. Let me just move that to the daily. Okay, so this is the US dollar at the moment. It shows you how strong we are. Very, very strong. Bit of an indecision. Why is there indecision at this level, do you think? Well, I'll tell you why there's indecision at this level. Because last time we were up here, it was back 5 years ago. Technical traders, they look back in charts. They look back at time to see what happened in the past. And as humans, we like to repeat human nature. It's the same reason why we go to the pub on a Friday night. The same reason why we do the same thing every weekend. You know, as monotonous as that may sound, that's what's happening. So at the moment, the US dollar has had this fantastic run to the upside. You'll see we've had basically almost a 16% move in a couple of years. 16% move in the US dollar. Okay, just this year alone. This year alone, we have seen, you know, almost a 6% move. This is on the back of the US bond yields. US bond yields pushing high. You can see the US bond yield down here at the moment. This is the 10-year yield. See the correlation between the US 10-year yield and the currency. Where the yields go, currencies generally follow. This is the 10-year bond yield trading. It's almost 3%. Yeah. Last time we were up here, look back again. It's about the same price as it was on the index. That is on the dollar index. So I'm looking this week for the Fed to potentially move their interest rates 50 basis points in line. This is going to lead to a lot of profit taking. Potentially building up there. So I am now looking at potential buying the euro dollar on bounces. Okay, so buying the euro dollar would make sense for me at the moment. This is the 8-cap chart. This is the euro dollar. This is the daily. You can see here we're coming into this resistance, or this support, I should say, at the same correlation between bond yields and with the DXY, the dollar index, because the euro makes up about 2/3 of the dollar index. I'll be looking to buy this on any bounce in here at the moment. Okay, so any good news today? There's no signals in here for me at the moment. There's no buy signal. Remember, the only counter trend trade I'm going to take is basically when we see a daily setup, but there's nothing there at the moment. But I'm, you know, pretty much in the camp that this trend is coming to an end and we're going to find some support at the moment. So I've got no real trade setups in here at the moment, but that it would be my longer term trade view on the euro dollar this week. So if you want to capitalize on the dollar strength, maybe a bit of profit taking, there's a potential trade in there at the moment. Of course, if you're buying the euro dollar, you're obviously naturally going to have stops below 104.50, I would have thought, to protect yourself, always trading with stops. So that's my sort of like macro view, the macro view of where I see the currencies going. I just want to talk a little bit about my intraday trend following strategy. Okay, so I believe, firmly believe, that none of us really know where the markets are going. Okay, we look at charts, we look for charts for clues, just give us clues on where price may be going. Okay, nothing is ever set in stone. Often when you are seeing a trend, yeah, I'm a trend follower. I want to get into a trend. I don't want to buy tops of candles. I don't want to be selling the bottoms of candles. Yeah? All markets we trace. All markets have their impulsive move, corrective move, impulsive move, corrective move. But the thing is, we don't know when the markets are in this impulsive move and you're having the start of a corrective move. We don't know, or the pullback, if that is going to be a pullback or it's going to be a bigger correction. We don't know that, right? You have to accept we do not know that. The only way that I get my edge on this, I look at my momentum meter, I look at the strength of one, the weakness of another, and that is the currency that I want to be focusing on for an edge. Then I use price action, simple price action. I actually use a trading tool. You can get these trading tools on I think there's free versions for these on TradingView. As I say, Eightcap now merging up with TradingView, so that's great as well. You can get these free tools. This is one I had coded for me inside the Forex Signals community, but they're pretty much standard. Here I've got an engulfing and a pin bar. Okay, so I'm going to switch those on at the moment. Now, typically I'm on a lower time frame chart. Typically I'm on the lowest I normally would go on is intraday would be a 1 hour, 1 hour, 4 hour intraday. But for the sake of this little live event, I'm just going to have a quick look at the lower time frames. There may be some opportunities in there for us. So I'm just going to activate the scanner and it's going to pull up potential trade setups. Now, this is just telling me where these price action patterns are. What I need to do is look at the actual chart, look at the higher time frame to see indeed if there is a potential trade opportunity. I'm just going to go straight to this Euro Swiss trade and see what's going on there at the moment. And indeed, this, I will tell you now, has a potential trade setup for me. Okay, so what we got here at the moment, we've got our moving averages here on the 15-minute chart fanning out. They're moving up to the upside. The 1 hour chart, the higher time frame chart, this is defined direction for me. I'm not selling this currency pair. I don't care what happens in intraday. I'm not selling it. I'm only buying. I'm on the right side of these moving averages, 8, 13, 21. Okay. And you see on the 4 hour time frame as well, nicely found that moving averages. In fact, that's a nice bullish pattern there on the 4 hour as well. But back to the 15-minute chart where we had this potential setup, this is telling me something. This is telling me that we had this pullback. This pullback, okay, quite small. It's only a 10-pip pullback. It's a 15-minute chart, yeah? The ATR, average range on the 15-minute chart is only 7 pips. But we've had this pullback. So the buyers are in control of this currency pair. It had the pullback, took some sellers after this doji, okay? This is a potential buying opportunity. So I'm actually going to take this trade because we've had this bullish pattern with the direction of the trend. So what we'd normally do is take a long trade if it breaks the high of that candlestick pattern. And my stops typically are going to be a 2 ATR. So I look down on the bottom of the screen here. Hopefully you can see that. I'm sure hopefully you can see that. We've got an ATR at the moment of about 8 pips. So 2 ATR, great way to start. If you're struggling to find out where to place your stop losses. I know people look at the charts and look at the levels of support and resistance. It's a very right thing to do. But if you are struggling, using a 2 ATR stop and a 3 ATR profit target and trading that, you ain't going to break the bank doing that. And if you do that over a period of time, as long as you've got some sort of edge on your entries, then you will make money. But don't take my word for going back test it. So an entry here in the Euro Swiss with a 2 ATR stop and a 3 ATR profit target would make sense. Don't trade this just for the sake of this live event. I'm not asking you to copy me. This is not a copying event. I'm telling you how I analyze. If you do take one trade just because I've said so, that is not trading. Unfortunately, that is gambling. Trading is law of large numbers. It plays out over time. It's not something that you can just take one trade and break the bank. I basically will have multiple losing trades and multiple winning trades, certainly more on the 15-minute chart, but obviously over time they play out. This could be just one of those losing trades. It hasn't broken the high yet, so we wouldn't be in the trade. The trade entry would be up there at 130, 103 sort of 20, with a, as I say, with a 15 pip stop. We haven't triggered the trade, but I quite like this one, in fact, because we've broken out of this resistance zone. You know, going back to the 1 hour chart now, you'll see this zone here would be a level. I can assure you that there are going to be traders are looking at that level. All these traders up here, yeah, are looking at this level here, breakout. Oh, we should have taken our profits. Off it rolls. Didn't take the profit. Get up there again. There's traders out there that will be looking to take profits in this. Now we've passed that level. The sellers are out of the way. All these long traders, they're out of the way now. Yeah. If you were trading these longs and you'd have seen this high up here, then the pullback, you think, oh, I should have got out. You've had a second chance. You'd have got out. So a lot of the long traders are out. A lot of the sellers are out of this now. So a small pullback into this old resistance could indeed act as support. So I actually quite like the level anyway on the higher time frame charts. So just mark it down on your whiteboard and on your note paper. Andrew's looking at the Euro Swiss with a long trade. On a longer time frame chart, of course, you would have, you know, this is say a 1 hour chart now. 1 hour chart, you'd have your stops basically below this swing low. Okay. In fact, now I'm on the 1 hour chart. My preferred time period, I would be looking at this level here as bets off. If we trade below this level where you had this consolidation phase, yeah, I would say below here, I'm quite happy to lose money down there. I'm only going to be risking the same amount of percentage. But if we trade down here, I don't, and that's going to be through the moving averages, I don't want to be in that trend continuation trade. I'll just lick my wounds and move on. But yeah, quite liking that trade there in the Euro Swiss on the 15-minute chart. Okay, so this is really a great tool. Keeps you focused. As I say, you can use this on TradingView. I'm sure there's free versions of it. This just sends me notifications to my phone if I'm not at my desk, but you don't need that necessarily. Pound against the Swiss. What do we got here? This is an interesting one. This is a very interesting one. What do you think the trend is here? This is a 5-minute chart, by the way. I just want to look out at the 1 hour. I mean, the 1 hour we've been in, we've been flat lining. We've rolled off this double top now. I would be a little bit concerned about buying here. This is maybe a key level. Remember, I only want to take, this is the 4 hour chart now. I only want to take the high probability trades. I'm only trying to make 4 or 5% a month. That's brilliant if you're trading prop. And I want to take the high probability ones. That pound Swiss on the lower time frame chart looks fantastic. Pullback, moving averages, bullish pin. Ordinarily, you'll be buying here with a view that it's going higher. I need a 280R stop. I need 16 pip stop. I need at least a 16 pip profit target. 16 pip profit target is going to put me right through that level of resistance. I ain't going to take that. Great little setup on the 5-minute chart. 3 bits of analysis. Profit target through key level. Move on to the next one. I want a bit of fresh air. I want a bit of blue sky or deep water. What's deep water? Normally green, isn't it? Shallow water is blue if you're a diver. Green water is normally deep. Is that the right way around or the other way around? Yeah, green is deep water. I don't want to be trading right into a big level. So although I like the pound Swiss in terms of direction, it's most probably not one for me at the moment. Okay, so I'm not taking the trade there for now. So that's one we will just take off. We will have, let's have a look here. There's Euro Swiss we've talked about. Euro dollar, interesting what the Euro dollar is up to. Euro dollar. Okay, so this was a while back, of course, when I came on. So this Euro dollar, we've had a bullish pattern here. So it's looking at this candle here. Okay, this candle, engulfing this candle on the pullback. It's a bullish pattern. So you'd have been in this trade. You'd have been, what, 5 pips up at the moment with a 280R stop. 80R on here is about 6 pips. If you're trading the 5 minute, what is this? This is a 5 minute chart. I don't trade the 5 minute charts anymore. I'm just too busy. But you'd have a 10 pip stop. You'd be long this trade at the moment. Bullish pattern. Again, would I have taken that if I'd have seen it real time? No, I wouldn't. I wouldn't have taken it, even on the 5 minute chart. You know, I don't take these just for the sake of the pattern. It's got to give me the edge. And at the moment, the 4 hour chart, it's consolidating. 1 hour chart, it's consolidating. My moving averages are all bunched up. FOMC, taking the 5 minute long on that, it might be working. I don't care if it's working. It's mostly, you know, you'd have been in profit, but I don't care. I don't care missing out. It wouldn't have been a trade I'd take. No Harry hindsight here. I'll tell you the trades I would take and the ones that I wouldn't take. Let's have a look. Do we have any questions? Do we have any questions coming in from the audience? I'm quite happy to look at anything you want to look at. I'm just gonna drag this out for another 2 minutes to see if there's any more setups, and then we'll wrap it up. If there are any questions, we will get to them now. I'm just asking admin to. I don't seem to be able to get hold of them for some reason. Someone asked about the dollar against the CAD. Okay, so let's have a quick look at the dollar against CAD. Okay, so let's just have a look here. Dollar CAD. First of all, dollar CAD. You asked me about the dollar CAD. I'm looking at the momentum meter. The CAD is strong. The dollar is weak. That's from the higher time frame charts. Look at the 1 hour. The CAD's coming down. Well, actually, the dollar's coming down as well. Both of them are coming down. So they're moving in line at the moment together. So that basically means there's a bit of consolidation. But if you actually look at the price chart, okay, it is reversing. It's reversing on the, well, if you look on the lower time frame charts, it's pretty flat. You saw that on the momentum meter because they're both moving together. This is a 30-minute chart, 1 hour chart. If you're using my strategy and you're looking at the higher time frame chart, well, you wouldn't have taken it because the 4 hour is we're in the jaws of the 4 hours. But if you look at the 1 hour, we're down. Okay, so we're down on the 1 hour. If you're trading the lower time frame charts, 15 and the 5, you look for the hour for the trend direction. You ain't buying. Don't care what happens. I'm not buying. I'm only selling. Yep. Okay. Lower time frame charts. Had you been looking at for 15-minute entries, well, you may have seen an entry here. I think it's got potential to move on. 30-minute chart. This bearish pattern. This is a bearish engulfer. This is showing you this pullback. Is it a pullback or is it a reversal? I don't know. But this candle here tells me that it's more likely to be just a pullback, and off we go again. So on the 30-minute chart, you know, 30-minute chart, you got a 20 pip stop, which is above the candle high for a trend continuation. Oh, yeah, I like it. A 30-minute chart. If you also just put in this another bearish candle in the direction of the trend, absolutely, absolutely. And look at the 1 hour. This is the 1 hour chart now. Yeah, it does look as though it's reversing. I give you that. As I said to you at the beginning of the event, you know, I expect the dollar to come under pressure into FOMC because it's pretty much baked into the pie. The CAD's coming down as well at the moment. I mean, obviously we've got CAD data out later on in the week, CAD unemployment, which I don't think is necessarily moving that, but it's something to be aware of. But this currency pair, yeah, it is reversing. It's reversing at what can be only considered to be, quite a big level. Yeah, this is the daily chart bouncing off 128. I mean, it's a big level. Yeah, it got up there March, and we've been rolling back. So yeah, I mean, technically wise, I wouldn't disagree with you. But you got to pick your entries. You can't just be taking trades just because you got a view. But it does look as though it's reversing. Use price action in the direction of the trend. Okay, folks, my time is up. I did have a little ping there on this. Let me just see if there's any more setups. they've just come out. We've just had no more setups on that at the moment, so nothing going on there. Okay, so as you know, my name is Andrew Lockwood. I'll be your guest host for the month of May. Looking forward to that as well. If you want to let me know what you think and get in contact for next week's event, you can do so. Just drop some comments there, and I'll look at it for next time out. We will address any questions that you have. I've given you a bit of an insight there into my trading strategies. Next week, I'll also talk about my reversal strategies, those big reversals that we can see in the markets. They don't often happen 2 or 3 times a month, but when they do, they can be very, very big, basically inspired by my time on the trading floor. I work for forexignals.com. I do stream live around the clock. Forex Signals and How to Trade, pretty much the same company. I am streaming live around the clock with my fellow mentors here at forexignals.com. I think we've got something going with you guys here on the 8cap. There's a 50% discount. If you want to come over and avail of 50% discount, you can do so. Try it out, actually. It's a 7-day free trial. You've got nothing to lose. If you don't want to stay, you don't have to pay. But you can do that. We're streaming live. We've got lots of education content as well. I'm not into the sales pitches, but there you go. That's just something that we've been told to do. It's been a pleasure. Hopefully you found it useful. Sorry I didn't get the text sorted out to begin with, but we'll sort out that for next time. If you're going to be around, I'll be doing the YouTube from Monday and the same time next Wednesday here on the GoToWebinar. And the following week I'll be doing the same, but I'll actually be in my villa in Thailand, hopefully with better weather than we're having here in the UK, with a nice backdrop. I will try and put a shirt on though, rather than trading with my swimming attire. Okay, thanks indeed for tuning in, and I'll see you next week. Have a good week. Stay safe. FOMC tonight, Bank of England tomorrow, non-farm payroll on Friday. Beware.